All right, welcome to the How To Two podcast. I'm your host, Jesse, and today I'm super excited to be talking to Matt Enfield. Matt works with Canopy Mortgage and is a mortgage officer. So he does all of your loans from simple refinances to, your home loans. He does some other cool products as well for those that are self-employed. So Matt, welcome to the show. Thanks so much for jumping on.
Yeah, thanks for having me.
Awesome, man. So tell us a little bit about yourself. Why lending, and why is this kind of your calling or your job?
Sure. Yeah. So I think the thing that I really like the most about lending is just the fact that it's kind of a niche industry. It's not something that a lot of people hop into, right? Like you don't go to college and say, hey, you know what? I'm going to college to be a loan officer. And so with that, on the other side, most people do end up buying a house in their life, right? If not multiple. And so the first time I really considered it, my buddy was talking. He said that he just bought a house, and he said that he would have had no idea if the loan officer had taken advantage of him or not, just because he didn't know what to look at and what was going on.
Right.
And so I knew for like my friends, myself, and whatnot, I just thought it would be a really easy way to help people out, and at the same time, obviously, turn into a career.
Yeah, and that's awesome. So, I mean, like, on the real estate side of things I do, obviously we work with lenders a lot.
Sure.
Right. And there's been a couple deals that you and I have worked on as well where we've talked to each other. And so, the importance is really, in my opinion, having a really good loan officer on your side. So, as far as lending goes, like I know that there are different licenses you can have to do deals outside of the state of Utah as well.
Sure.
Do you have any licenses outside of the state, or do you have resources to do loans outside the state?
Yeah, absolutely. So, of course, most of my business is done in Utah, but having friends and a family and getting into it for that reason, there's I think I would say about 25 to 30 states that we can do business in.
Awesome.
And most of those being states that the people live in. Maybe not like North Dakota or something like that, but we got a majority of them.
Right. And, I know for us and our Tennessee team that we run, we've had people that use Canopy in Tennessee as well. So that's really cool. Awesome, Matt. So kind of we'll pause here for a second as I'm thinking of questions, because I want this to kind of go your route.
Sure.
Okay, so let's see. All right. So as far as lending goes, like what are some of the things that, make it difficult for people to get a loan?
Honestly, the most common thing I see with people I work with, because I mainly work with first-time home buyers, right? Most of the people that I know and that I like to work with are first-time home buyers. And the main thing I see is just a lack of credit history, which makes it so their credit score tends to be a little bit lower, and there's not much to do to make up for a lack of credit history. If you've only had a credit card for a year and that's the only thing you have, it's a time thing. That's the only really impassable thing that's kind of just like a time waiting thing. There's other things that make it a little bit harder. Maybe if you have just a ton of debt and we have to start working on paying that down, or just other issues like maybe we talk about maybe if you just got out of college and you're working in for example, there's some guidelines in terms of working in a commission or bonus based job and trying to have history there. So there's some that are require a little bit more time, but the nice thing is that it always works out. And sometimes you might just have to wait a few more months.
Gotcha. One of the things that I hear a lot, you mentioned credit, is credit scores, right?
Yeah, absolutely.
And I think that a lot of people in this, that are first-time home buyers, and even those that are not, but that have a lot of credit card debt, don't realize the significance of what that can do for your loan or the different terms you can get. So, I know, and correct me if I'm wrong, but a smaller balance on a credit card could really affect your credit score significantly. So it'd just be as simple as paying that off really quick.
Yeah, absolutely. We were working on a loan. I think it actually might have been one of your deals where they actually qualified without it, but we were able to pay off a credit card. It was about $250 or $300. Can't remember the exact amount, but a really low balance relatively, right? And they paid that off, and it boosted their score about 25 points. They qualified for a higher pricing point, and they were able to get just a way better price and qualify for a better loan and save thousands of dollars by paying off $350.
Awesome.
Around there.
So let's talk about pricing, because obviously, that's one of the biggest things, right? I always hear shop your lender, make sure you have a good lender. So what, like pricing wise, like what are things to look for in the pricing if I was like just brand new, not knowing anything about it?
So the easiest way is just to find a lender that you trust, because you could talk to 10 different lenders, and as long as you have one that you can trust, like for example, I really do want to help people out. And if someone is $10,000 cheaper than me, I'm going to show you that and tell you to go with that person, because at the end of the day, you're paying the mortgage. And if you're my friend or a reference or somebody that's just coming to me, I know my worth, and I will tell you when I am worth the extra money, but $10,000 is a lot to make up for, right? But apart from that, the easiest way if you want to do it on your own is to look at two different things. And sometimes lenders try to be a little bit sneaky with it, and so there can be caveats to it. But generally, you want to look at the APR, and you want to look at the points that are being charged.
Cool.
And you want to make sure that you're comparing apples to apples. So this has to be on the same rate. It has to be on the same term, 30 years, for example.
Same date too,
and
right?
the same date, exactly.
Get your quotes the same date.
Exactly, because rates fluctuate day to day, especially in a time period like right now, where the election just happened and rates are swinging up and down, left and right every other day.
Yeah. So it's something interesting because something huge happened this year, right? In March, rates went up really high, and then all of a sudden April just dropped. And I can't help but think it's because of the coronavirus, right? And stuff. But at this point, where are the rates? And like, if I was looking to either purchase or refinance, what does that mean for me?
Sure. So rates are still really good right now. I'm not gonna lie. I thought that they were gonna jump up a bit after the election, and they have. They've got, like I said, they've been a little bit volatile. But especially if you're comparing to historically, I gave out a quote yesterday for a 2.5, and that was without buying down, or in other words, prepaying interest or paying extra for the loan. That was just a pure what they qualified for, right? So here in a 2.5, whereas this time last year you were looking at a 4%, 4.25 for the same credit score, time period, all that kind of stuff to factor in. Obviously, rates are great. It's a great time to refinance. It's a great time to purchase. If it's the right time, or you're close to the right time and you can make it work, it's just, essentially you can afford way more house for the same loan.
Interesting. And that's something like, if you have a rate right now, if you even purchased last year, maybe you should consider refinancing and looking at your options. Now, one thing that I always hear is, I don't want to contact a lender quite yet because they're going to pull my credit and I don't want that to hurt my score. So, what are some things you can do to help people with that concern? Because that's a big one.
Sure, yeah. So we can definitely talk over, to get an exact quote, if you want to know exactly what you're going to pay, pretty much down to, within, 5% or so, yeah, sure, you need to pull your credit. But to get a really good idea of what you're going to qualify for, you just give me a quote of what you think your credit's at. Oh, I think it's at around a 700. We can work with that. Cool. And then from there we can talk, it's probably going to be about in this range here. And with that little range of, you're looking at about 2.5 to 2.625, maybe 2.75, depending on, where your credit comes in. That alone right there should give you enough information to say, should I pursue this or not?
Yeah.
And then from there you can say, oh, you know what? Well, my current rate's at 4.5. I could drop 2%. Of course I want to refinance.
Right.
And you can just kind of, take that information, from there.
Yeah. And, as a real estate agent, I sometimes get that question like, hey, should I refinance? Some of my clients ask because I've helped them get into this home. I've walked them through everything. And I keep telling them, like, if you have a 4.5 or a 4 or even a 3.5 and you can take it down, that's just money you're saving that does not go towards anything other than paying someone for borrowing their money.
Absolutely.
Right? So look at that option and consider it. Make sure it's good for you because there are charges that come with that, right? But it could save you a lot of money. In fact, one person in particular I'm thinking of, we were able to talk to her and help her figure out that by refinancing, and even though she only had 10 years left on her mortgage, refinancing to a 15-year saved her $40,000 in interest, and that was like unbelievable, right? Yeah. So just having that conversation and helping, and what was great for me as a real estate agent is that showed a lot of value, right?
Absolutely.
That other people don't consider. So we're going to jump over. If someone was like interested in becoming a mortgage officer or mortgage lender, what typically is the process of becoming one?
Sure. So in terms of becoming a lender, there's a pretty straightforward path. Generally, what you want to do is you'll take some courses first, right? To learn about. There's a lot of laws and regulations in terms of lending because, there always have been, but in particular since 2008, when all that issues arose and it caused a housing market crash. So you want to go in and you'll take a course which generally consists of about 20 hours. Depending on where you're going to be licensed, right? There's some different state and federal requirements. That's for the federal. And here in the state of Utah, I believe it's an additional 8 or 10 hours after that. And then from there, you go and you take your national mortgage licensing test, and you'll deal with it and find somebody to take you on, right? You'll find a company or a branch or something of that nature that can employ you, and because otherwise it is pretty much impossible to do it on your own. You wouldn't have the financing power. You wouldn't have the sponsorship and all that kind of information, right? So that obviously makes it pretty difficult. And then after that, you pretty much just kind of hop into the water, right? So you can start lending from that point as long as you have your license. After the federal, of course, you need your state license, which is a separate test. But yet again, in the state of Utah, that's a pretty simple one. The federal one is the more difficult one that I would say, if I remember right, I can't remember off the top of my head, but I think it was around 60% of people fail the first time, 65, somewhere around there. 'Cause it's a pretty difficult test, pretty intensive. I think I studied about 60 to 80 hours to pass that test. So it's not a cakewalk, even though the steps seem fairly simple before it.
Right. And the thing that I find interesting with this industry is you can jump in, right? Become a mortgage officer or lender, whatever you want to call it. There's so many different terms. So that's why I'm fumbling with my words today. But the thing that I didn't realize is how much continuing education you have to do and how much comes out of your pocket. Because you're essentially self-employed, right? But then you have continuing education every single year that takes anywhere between 16 to 18 hours minus, all the other 8 to 5 workload that you have, right? So that was interesting to me. And then the other thing that I kind of figured out in my research is just the insane amount of time that this job takes, right? And not only are you trying to go out and sell and find opportunities to get new clients, talk to people about their loan options, but then you're also answering questions for clients, right? Yeah. And you're spending a ton of time on the phone. So give me kind of a day in the life of being a lender for you.
Yeah. So, it's kind of like you said, the day to day varies every day. A lot of people that go in, they wake up, drive to work, get to work at 9, clock in or whatever, depending on salary or not. And then they pretty much know what they're going to do every single day, go to lunch and then move on from there. As a loan officer, it just varies so much. I would say the average day you wake up and the first thing I do is I just go through, what feels like hundreds of emails, which could be me talking with a title company about an issue or sending them over more information they need. Could be me talking with an insurance company. Could be me talking with my own team, issues that they're having. Maybe they need more information with a borrower. Just the scenarios are endless, essentially. Could be just borrowers themselves sending in documentation or me chatting with them. And then from there, it normally moves on to I get a lot of phone calls. Pretty much, I think you'll get it as a real estate agent. It's kind of feels like you're just constantly waiting for a phone call, right? So a lot of people will just be contacting, and it can be people that aren't doing a loan that are just like, hey, so where are rates at, right? People that are asking just I get texts all the time just from friends with random real lending questions. They'll say, okay, well, I'm looking at buying a house. What are the different regulations in terms of a duplex versus if it's zoned as single family and border income and all these different kinds of random things that people just have questions about, which is great and I love it. That's that's what I'm here for. But that honestly, I feel like and that can be at 12 o'clock at night. That can be at 6 o'clock in the morning or 12 in the afternoon. Right?
I was going to ask, what's the latest phone call you've ever gotten?
I think the latest phone call I got, was right around 12.
Around 12?
Yeah.
One of mine was 3 in the morning, and a pipe had burst in someone's house. It was out of control crazy. But, that's the thing that I really want to stretch is the importance and value of having a good lender on your team, right? Because this is your house you're purchasing. You should be able to have your questions asked and have that availability. But some people go, well, I 8 to 5, right? And that's okay. That's their decision. But for me, if I'm working 8 to 5 and then I need to call my lender, like I need some flexibility and some people to return a phone call. So
Absolutely.
I love that. All right. So I want the purpose of this podcast is like how to and to, right?
Right.
And usually we give guidance, but we're going to just kind of switch it out a little bit. And I'd like to know in 2 minutes, what was your favorite loan situation you've ever done?
Got it. I think my favorite loan situation I ever did was, it was for this family, and they were a great family, so kind, really upbeat. And then when they first gave me a call, they pretty much, he told me, he's like, dude, there's no way I'm getting a loan, but I'm just kind of curious to see, we're moving out in the next month. We were living with family, and we just want to see if there's a possibility we could buy a house, because we've been renting for ages, and just to see.
Right.
Now, and I get that call a lot, and there's times where it doesn't work out. But we worked with them, and we had to do a lot of work. We started, it happened this year, and we started back in, I think it was middle of May or so. And we were working with their credit. They had to pay some different things off, and we're doing all these different things to boost it. And eventually we were able to get them qualified, and we got them under this really sick program that's called Eagle Connect.
Cool.
And through that, they were able to get gifted the down payment. So it wasn't built into the loan. It didn't need to be repaid. And they were able to get a beautiful house out here in the Saratoga Springs area, and didn't have to pay a dime out of pocket. They actually got their earnest money back at closing.
Oh, wow.
So literally $0 towards the loan, and but still had equity in the home. Cool. And it was a great situation. They, we had to do, like I said, it required a lot of finesse, and it was a difficult loan. Definitely lost some hair over it, but it was great because I remember at closing, I just kept talking. He's like, dude, I honestly thought this would never happen. He's just like, I never thought I would qualify for this loan. We just had, some different issues with our credit throughout, time and stuff. And it was really sweet to see that, they were able to get there, and they're just so happy, right?
Oh man, that's cool. And I think that's what's the most rewarding, right? Like for me, it's having a client call and say, hey, thank you so much. Like, we love our home, right? And I think for you and your situation is just seeing the whole process get through, right?
Yeah, absolutely.
And then now that person can start their journey to home ownership, and I think that's super cool. Well, Matt, really appreciate you jumping on our call, on our podcast today. This is awesome information. Where can people find you?
So you can find me, mainly, honestly, the best way to reach me is just a call or text, right? You can text me or call me anytime at 385-484-9948. Or you can, if you just want to, do a little bit of browsing, do a little bit of internet stalking without, pulling the trigger or talking to someone. It can be intimidating, I get that. So you can either go to radmortgageteam.com or just follow me on Instagram at Matt Enfield, MATT.
Awesome. Cool, Matt. Well, we thank you so much for jumping on today, and look forward to having you on another time.
All right. Thanks, Jesse.
Thanks.